Welcome back, guys. Another episode. As you can see right here, the markets are looking incredibly stable right now, but how long will that last? Self-proclaimed Satoshi, fake Toshi, Craig Wright, plagiarizing. What? If you're like me and asking a question that doesn't quite make any sense to you, what the heck is going on right now? The world is looking awful, yet stocks and markets are on a rally. And breaking news, there's a second wave of cases happening in countries that have loosened social distancing. And finally, looks like we are heading to a $5,800 Bitcoin price. What's up, everybody? Let's jump into it. All right, so if you're looking at the screen right now, you'll see we got CoinGecko loaded, and this is an important price to pay attention to, 67.10. That'll make sense once we start going here. Self-proclaimed Satoshi Nakamoto, Craig Wright, accused of plagiarism. Medium user compared Craig Wright's work with science authors and found way too much similarity. According to the user, self-proclaimed creator of Bitcoin, Craig Wright did not even change large parts of the stolen texts. So, look at this ding dong over here. A pseudonymous author, Painted Frog, posted an article on Medium highlighting the similarity between Craig Wright's work and other authors that wrote the same thing before him. So, not a good start, Craig Wright. I mean, we've already seen like several times in court that just his bonded carrier and the guy can't make it and blah blah blah, and then he has all these keys, and then we found out that the addresses he claimed weren't actually his because somebody else came out and said, hold up, that's my address, and then actually signed it and proved that it was his address. So we found out Craig was lying. He lies all the time. Just insane. So Craig Wright's work has text from Hillary E. Pearson's. The pseudonymous author found that Craig Wright's work has text from notable work by Hillary E. Pearson's, holding the name Liability of Internet Service Providers, which was published in 1996. The work highlights different situations of ISPs dealing with illegal content created by the users and counterparties. Tisk, 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 Craig. So yeah. And then Craig goes out, he said in the past, this is his quote, plagiarism is more serious than people think. Craig, it is. Craig Wright had earlier said that plagiarism is more serious than most people think and is a criminal breach of Copyright Act and is also a criminal fraud. The pseudonymous author in his post wrote that the work is heavily plagiarized and much of the text is taken, both in paraphrase and verbatim, from other works with no credit given. According to the post, Craig's original work contains 58 paragraphs, and it seems like he took 45 of them, with 25 being copied almost word by word. The self-proclaimed Bitcoin creator did not give any credit to the original authors. Craig Wright also took information from his work from another article by Pearson's titled Intellectual Property and the Internet, a comparison of UK and US law. Some other authors that Craig Wright copied information from, Ronald Mann and Beth Sisley, titled The Promise of Internet Intermediary Liability. According to the post, Wright had several references to these people in his text and was copying the footnotes from their work without giving any proper backlinks. So this is just, this makes me laugh. Like, I love seeing any negative news about Craig Wright. He's just ridiculous. So if you're as curious about the world as I am, things seem ass backwards right now. And this is an article from New York Times a couple days ago, and it's titled, Everything is Awful, So Why is the Stock Market Booming? This is a question that I've had and have been asking other people, and this gives some clarity. Basically goes into the fact that, investors and stock investors are anticipating that we're going to have a pretty quick recovery and that things will go back to normal. And also, I'll just read a bit. So 2 powerful forces are pushing in opposite directions. Commerce is being disrupted to a degree that seemed impossible just weeks ago, but simultaneously, stock investors are betting that powerful interventions out of Washington, including an additional $2.3 trillion in lending programs from the Federal Reserve announced on Thursday, will be enough to enable major companies to emerge with little damage to long-term profitability. So I'll go into a video here in a second where Chamath, the guy who is chairman of Virgin Galactic, self-made billionaire, Bitcoin hodler, goes into talking about how we should not be bailing out these big corporations. The large companies that make up major stock indexes tend to have reliable access to capital. So this is what we're talking about now. It's like all of these irresponsible companies that, basically had poor risk management, that didn't even keep enough money in the runway for a few months of bad months, now are asking for bailouts. They basically take their profits and they roll them back and roll them into stock buybacks and own larger portions of the company, and and now they're asking for bailouts, which is insane. But anyway, this is what's going on right now, is that the government agrees that they need to bail out these companies. And so therefore, they're buying the crap out of their stocks, and they're also giving them a bunch of money in order for them to not fail, and life goes on as normal for them. So even though they have poor risk management, poor management in general, where they're still their stock prices will remain strong, which we've been seeing. And this is talking about how investors look to the future, not exactly what's happening now as far as their investments and bets in the market. So the analysts who project corporate earnings are, in aggregate, forecasting a relatively mild hit. This is insane. They expect the companies that make up the S&P 500 to experience only 8.5% decline in earnings in 2020, with revenue falling a mere 0.1%. So how, right now we see things like airlines and cruise lines who are empty, who aren't operating. How could revenue fall 0.1%? That's nonsensical. Some of the strongest performers in the market rally have been companies. This is the craziest part. Some of the strongest performers in the market rally have been the companies most severely affected by coronavirus crisis, like cruise lines, hotel chains, and airlines. That suggests short squeeze. This is fucked. Short squeeze dynamics, in which a small upturn forced investors betting against those companies to close out their positions, turning the small rally into a large one. So if you're an investor and you see that industries that should be affected by a crisis like this, and then you're like, well, they're probably not going to do too well because, well, if you're a cruise line, nobody's going to go on a cruise right now. That's suicide. Flying in a small metal cabin across the world is also suicide. So let's just not use these services for now. And, you would think that it would be a smart move for an investor to short those companies or bet against them. And that's what some people did. And because the government decides to bail them out and give them trillions of dollars, the poor investors who actually had bets on decent fundamental analysis now get squeezed out, meaning that they got liquidated because the stocks actually rallied. What the heck? Insanity. So stock prices are always based on what the world will look like in the future, not in the present. In global financial crisis, stock prices bottomed out in March 2009. The economy did not begin expanding until July, and unemployment rate would not peak until October. So again, this is forecasting the future of what things will look like. But current market prices suggest that investors are counting on a speedy rebound. So I talked about this a couple days ago in a video, how Tom Lee from Fundstrat thought we'd have this V-shaped recovery, and I thought that was insane. And so this whole article and the reason that the stocks have been doing well, actually, and the correlation, because again, I think that right now, until Bitcoin and cryptos mature more, they will be correlated to the traditional markets for the most part, because they are most of the money in crypto or Bitcoin is still speculative money. So here we go. If this doesn't go on much longer than expected, if it really is 3 to 6 month event from the time we turn the switch on the economy off to when we turn it on, Then markets have already accounted for that and are looking ahead, said Jim Paulson, chief investment strategist of the Leuthold Group. It could be that the virus stays hot and this situation stays in place for 3 or 4 quarters, and we're not priced for that. So, I mean, that's what I think is going to happen, and this is why I believe that we're going to see a massive downturn in all markets. And I'll get to some things here shortly that will give some justification to my hypothesis. The current pricing assumes that the cascading series of failures will not happen. That widespread job losses and drops in income won't cause the mass closure of businesses. That people will have a job to go back to and will be willing to spend when the public health crisis ebbs. So these are all some assumptions that would all have to take place in order for the market to stay healthy, they are saying. So this is quite a bit of things that would need to happen, right? So first and foremost, the market needs to, or this crisis needs to end relatively soon in the next 2 or 3 months, which I don't see how that's going to happen. That the businesses that are closed don't stay closed. Again, so this is going to be a very tricky situation for governments, right? I know Trump wants to get people back to work and the economy open again, but you do that, you're going to have an even larger outbreak of people with this virus, and then they're going to be then there's going to be pressure again for them to shut it down again. So it's a very, very tricky of when you can open things back up again. And I'll get to a video that again explains this in even more depth. And finally, you have to anticipate that people are going to be willing to spend when they can go out and about again, which to me seems very unlikely. You know, people have been out of jobs. There's been 16, 17, maybe even 20 million unemployed right now. And so they've been without paychecks for some time now, 2, 4 weeks, 6 weeks, whatever. And that means that if they had any savings, which most don't, but if they did, that's now gone. And so if they go back to work, they have to go work again for 2 weeks before they get a paycheck, which means when they get their paycheck, it's not like they're going to go out and spend it. They're going to be paying off whatever money they tried to borrow to stay alive right now. So I don't expect consumer spending to go up significantly if and when people are allowed to go out of the house again. Anyway, so that's that. Now check out this, right? Okay. Speaking about this whole issue with the corporate bailouts and whatever, here is Chamath, which is, I talked about him earlier. Check it out.
And I think we all agree with you that more money for Main Street is needed. Maybe not in spite of the money to all of these companies or whatever that make up the economy as well. That more money is needed everywhere, perhaps. But are you suggesting, you keep saying propping up zombie companies. Are you arguing to let airlines, for example, fail?
Yes.
Why? I mean, how does that make sense in the broader scheme of the economy?
Because when you look at what it means, this is why I'm saying, like, this is a lie that's been purported by Wall Street. When a company fails, it does not fire their employees. It goes through a packaged bankruptcy, right? If anything, what happens is the people who have the pensions inside those companies, the employees of these companies, end up owning more of the company. The people that get wiped out are the speculators that own the unsecured tranches of debt or the folks that own the equity.
Which should happen, right?
And by the way, those are the rules of the game. That's right, because these are the people that purport to be the most sophisticated investors in the world. They deserve to get wiped out. But the employees don't get wiped out. The pensions don't typically get wiped out.
Why does anybody, I just don't understand, why does anybody deserve, using your word, to get wiped out from a crisis created like this?
Because you don't bet on things that didn't prepare properly. You don't bet on companies that didn't plan properly. That's why.
How does anybody deserve to get wiped out?
Well, but just be clear, like, who are we talking about? We're talking about a hedge fund that serves a bunch of billionaire family offices. Who cares? Let them get wiped out. Who cares? They don't get the summer in the Hamptons. Who cares?
I mean, there are
But if
people.
you get
You
a
don't
clean
think the
cap table,
employees?
hold on, Scott.
You don't
If
think
you
the
get a
employees
clean
of these
cap table-
companies own stocks?
Shut up, Scott. Let Ben talk. Jesus.
I mean, own their stocks, own the company's stocks?
You can look on Bloomberg and you can see what percentage of these companies are typically owned by. These things are owned by BlackRock. These things are owned by these huge, amorphous organizations. Ultimately, downstream, and the employee owns a few $100s or a few thousand dollars of shares.
Well, I just don't understand.
So
This
my
is
point
like
is,
like a natural disaster. And why does anybody deserve to get wiped out?
Scott, of course you don't understand. You're a news reporter. You're not an economist. You're not a banker. You're probably not an investor. You're a news reporter. That's why you don't understand.
Wouldn't that be immoral in and of itself?
No, because what's happening right now is what I'll tell you is on Main Street today, people are getting wiped out. And right now, rich CEOs are not, boards that had horrible governance are not, hedge funds are not, people are. 6 million people just this week alone basically saying, holy mackerel, I don't know how I'm going to make my own expenses for the next few weeks, days, months. So it's happening today to individual Americans. And what we've done is disproportionately prop up and protect, poor performing CEOs, companies, and boards. And you have to wash these people out.
Amen. Chamath, my man. I like him. He's speaks the truth. But what's one thing that is a bit interesting. I don't have the article pulled up here, but I did read in one of my Google News feeds today that there was something that Virgin Galactic is asking for a bailout, which would be incredibly ironic considering what he just said. Maybe I'll dig that up and pull it up in my next video. So check this out. Coronavirus. Okay, so when we came up here on the 4th of April, like 9 days ago, holy crap, what a peak that was. Almost 105,000 new cases that day, right? And then we started to pull back, right? And then there's only 74,000 cases the next day. And then right around here on the 6th, about a week ago, there was all this news that, hey, we've leveled off and that it's getting better and blah, 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 and that we don't have so many reported cases and that maybe this thing is... And this is when I think the market started to really gain some confidence again because they figured out, well, it's going to be over soon. And then look what happened. Boom, 82,000 cases, 82,000 cases, 92,000 cases on the 10th. On the 11th, 98,000 new cases. And then yesterday, 75,000 new cases. So, one of the things you have to remember is that we don't have the capability to test the majority of the population right now. The people who are being tested are people who are going to the hospital with severe circumstances, right? People who are sick. And so imagine what this is going to look like when we're actually able to test more and more of the population. I expect if we could roll out something here shortly that would give the ability to test millions and millions and millions of people around the world, this number should skyrocket, right? Because a lot of people, we know this, that a lot of children carry the disease. They don't even really get sick. And a lot of people have very mild symptoms. So they might just think they have a cough or a flu, whatever. In the back of their mind, they might be wondering if they have corona, but it hasn't gotten worse enough yet for them to go to the hospital, and therefore they're not getting tested. And I imagine that there's tens of thousands of people around the world, if not hundreds of thousands around the people around the world that have this situation going on right now. So I expect when we have significant access to testing for this to get a lot worse. Okay, so check this out. No rent was paid in April by nearly a third of American renters. A third. That is tremendous. I used to own some properties pre-2008 when I was younger, and I shouldn't have owned properties because I could not afford to have them. I did it on one of these negative interest loans and adjustable rates and blah, blah, blah. And, as soon as I had a situation where my tenants weren't paying rent, I was upside down already, right? And this is what has been happening again. People that were in the same situation that I was in in 2006, 2005, things like that, are happening right now. And so you have 1/3 of Americans not paying rent in April. And I expect that in May, it's going to be this, maybe even more, because people will say, hey, hold on, like, people aren't paying their rents. I could not pay my rent. Okay, cool. I'll do that. And eviction is a bitch, right? So getting people out of there is not easy. So what's going to happen is this is going to be a domino effect, right? So if renters can't pay their rent, that means the homeowners can't pay their mortgage on large in part. Maybe some can, but a lot of people will stop being able to pay their mortgage, which means that the banks will be sitting on these properties where they anticipate a bunch of revenue coming in, which is not. So then you have defaults on mortgages going in, right? And so this is just going to be a domino effect. I don't want to get too much into that, but like, this is where we are heading. And it's not like, again, it's not like if these guys get a $1,200 stimulus check, they're going to be going out and paying their rents. They're going to go buy food and mask and water and whatever else that they need. But rent is not going to be on the top of their list. Okay, so check this out. Remember the article that we just talked about that talked about if we have a speedy recovery? Well, check this out.
Richard Engel reports tonight on the battle to stop a second wave.
Deaths in the UK are spiking now, approaching 1,000 a day, as high as Italy and Spain at their peak. And in a troubling sign for the future, the virus is re-emerging in parts of Asia, where it started and was largely beaten back after some social distancing measures were relaxed. Last February in Hong Kong, I first met Dr. Alfred Wong. I recently caught up with him again.
What happens if you stop paying attention to this?
In Hong Kong, the second wave is actually even bigger than the first wave. People starting to walk in the streets without any protective measures.
The same in Singapore, where earlier this year I met virologist Danielle Anderson.
So the numbers went down first when containment measures were put in place. Now we have, with other countries then locking down, people are wanting to return back to their home country or to their place of work. So those people are coming from different epicenters of infection. So now, along with their suitcase, they're bringing the virus back with them.
So for now, Europe isn't letting up. Countries are extending their lockdowns and flights have been grounded. Flight tracker at 9 a.m. local showed a handful of planes over all of Spain, Italy, and France. Across the ocean in the United States at 9 a.m. Eastern, a very different picture.
Woohoo, look at that. So, I know that people like Trump and other people want to get the economy back open again, right? Well, we're seeing what's happening in Asia now where, large in part, they nearly had it beaten off. But, all it takes is one person who's still contagious to give it to another person, who gives it to another person, and that person gives it to 2 more people, and those 2 people give it to 4 more people, and blah, blah, blah. And then exponentially we have, boom, another outbreak again. And back to social, like, this thing is going to go away by herd immunity, which is either going to be from a vaccination that we develop in 12 to 18 months, or enough people on the planet get it, move past it, and potentially become immune to it. However, we still don't know if that's the case. Anyway, so back to the same article again that we talked about initially. I really, really do not think that we are going to have this positive outcome with people going back to work and life carrying on as normal again, as the New York Times article suggested. Okay, so here we go. Remember how I said in the very, very beginning, pay attention to this price. So this was from a couple days ago, but it's interesting because it talks about when they wrote it, it was saying if this happens, then that, right? And so Bitcoin price drops to key level as 100% rally since crash looks shaky. So here we go. So the price of Bitcoin loses 3-week-old trend line. So we see here this trend line right here. Going up, 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 up. Uh-oh. There we go. It broke it. Uh-oh. So here you see this was it at 68.66. Now, and actually, sorry, it's even up here, 7,200, right? But broke down. And so now we're seeing that it is far below that, and even more now. So since they wrote this article, so it goes down to talk here like the price of Bitcoin couldn't reach the next resistance as it was rejected. Sorry, no, not that line. Coming back down here, the last support area for bulls is in the 6750 to 6800 area. The first sign of weakness was losing the yearly and monthly level at 7200. However, losing the 6750 and 6800 would trigger a further heavy drop down and would trigger a higher volume up. What does it say? Losing the 6750 would trigger further heavy drop down. So what have we done? We lost it already. 6708 with a big drop in volume as well. So here we go. This is showing, see, would become pretty messy if we lose 6900 area, which we did. And then they say the next area of support here is 5830. If you look at the report, I don't have it pulled up, but from Arthur Hayes, he thinks that 3,000 is very possible. So, yeah, and then they go toward 5,800, which I just mentioned. And then weekly time frame needs to close above the 100-week moving average, right? But it did not. This was written like 2-3 days ago, and so the end did not close above what it wanted to, which means we have downward movement. So here you see the bullish scenario for Bitcoin, right? And it is now obsolete. The bullish scenario is pretty straightforward, but less likely at this point. The price of Bitcoin just lost an upward trend, which implies further downward pressure to occur. However, there's a possibility that the drop down is a fake out. For that to be the case, the price of Bitcoin needs to hold the 6750 to 6800 area for support. So far, it has not. After that, the main goal is to go. After that, the main goal to go for is reclaiming the yearly level at 7,200 for support. Once it happens, a further upward push is expected to hit the target of 7,800 as the next levels. But that's not going to happen. We already lost that. So here we go. The bullish case for Bitcoin, the bearish case for Bitcoin. Losing the 6750 to 6850 area would imply that the market is showing weakness, and the next massive support area to watch is the 5,600 to 5,800 area. In between, potential temporary support can be found at 6,300. Okay, so what they're expecting here is that we bounce down to 6,300, maybe bounce off that for a little bit of support, maybe not, but if we do, okay, expect that. But it doesn't mean that we still aren't in potential danger of moving down to the $5,600 area, which makes sense to me. So I want to show you something that I created for you guys. This video has been a little bit long, and therefore I am going to go into it in more depth on the next video. In fact, I'll just make a video mostly just for this. But I called it the Get Rich BTC Calculator by the Dip, or dollar cost averaging. So here's a calculator that I made for you guys. You know, a lot of people ask, like, how much should I invest in crypto? You know, it depends on how much you can invest, you know, and invest in the right way. You know, do you know how to dollar cost average? And now with the price of Bitcoin going down, it's not necessarily a bad thing, right? It gives you opportunity to get back in. But what I did is a lot of people ask, you know, what is the best price, or what price should I buy Bitcoin at? You know, and people don't have any idea what their expected returns are over time, and so it's hard to imagine in your mind what that $100 investment, what a $1,000 investment, what a $10,000 investment might look like as the price of Bitcoin appreciates and goes into the next bull run. So I will show you this calculator on the next video. All right, guys, thank you so much. Please like and subscribe. It would mean the world to me. And I will catch you soon on the next video. Cheers.